Everyone, my name is Dennis and I help people to invest. In this video we will research waste management industry and spoiler, I think we have two good stock to buy right now. And here you can see all tickers: Waste Management, Republic Services, Waste Connections and other. I'm using median price to sales plus gross profit plus earnings method, and actually it is historical data for 8 years. In waste management it is quite sad because historical price to sales 2.89 and price to sales right now 3.35. That is why we don't have any upside. And definitely people just save their money in waste management, and I don't think that we will see any return, because 5% it is not really interesting for me. And we're going to the next one. Next one, Republic Services, price to sales 2.7, and we have the same situation. And I will make it a little bit quicker if you just want to watch on these slides, just push the pause button. Not interesting, price to sales are higher, and I'm not expecting any significant returns. Waste Connections, not really interesting because we have maybe 5% upside in 2 years, and again it is absolutely not interesting for me, but it was a really nice opportunity to buy it on a current crisis. Then we have GFL Environmental, fair price minus 11%, but they have problems with profit margin. That is why we'll just pass them. Then we have Clean Harbors, and I really like this grow in red line. Red line is earnings. Their earnings are growing, and it is definitely awesome. That is why it will be our first company to research, because in theory it is a little bit overvalued right now, but maybe we have to adjust this average price to sales 1.2 maybe to price to sales 2, because they are definitely working on their margin. But we will know about it a little bit later. Then we have Casella Waste System, and I think it is not really interesting because fair price it is 61, now it is 92. Not interesting, and plus you can see that their margin are lowered a little bit. Stericycle, and I definitely don't want to invest in a stagnation company, but they are close to fair price. Montrose Environmental Group, profit margin in negative zone, and I really don't want to bet on something unprofitable right now. Heritage Crystal Clean with ticker HCCI, and first of all you can see this beautiful growth in gross profit, and it is really nice. Then we can confirm it here, a profit margin over 10%, and they're growing 38% in 1 year. Definitely we will research HCCI a little bit more. And I really like that with just price to sales 1.25, you can see it here, we have quite a huge upside from 33 to 44 in 1 year, and definitely it is interesting. Then some LICY, and I think I filmed about this company, but it is just SPAC hype, and they are not profitable. Fair price quite far away from real price, and now they are in a buy zone, but again they are not profitable, profit margin minus 10%, and I just don't want to invest in unprofitable business on this cycle. LNZA, never buy something like this. It is super risky. Then we have PESI, profit margin minus 5%. Quest Resource Holding, we have a fair price right now, and with growth rate 4%, it is just not interesting for me. Aqua Metals, again, unprofitable company, strange chart in AMBI, GWAV. In this part of our list, we have really small companies, and they are not interesting, like AWX, it is not profitable, and the last one, Gen, but it is profitable only for 1 year, and it is like $90 million capitalization. I will just pass it. Okay, we have 2 companies to research. It was a Clean Harbor with ticker CLH and HCCI Heritage Crystal Clean. I really like Heritage Crystal Clean. Price earning 9, not 50 like in super biotech companies or another tech. Really low margin, and I think we have to watch it on a Guru Focus. Maybe we'll see something interesting here. On Guru Focus, this company looks really nice. We have valuation chart by Peter Lynch, far away from price right now, and Guru Focus score 88. I think it is absolutely okay. Plus, they have some sort of focus, full service parts cleaning, hazardous and not hazardous bulk. Gross margin quite high for companies like this, 29%, net margin 11%, items that score in close to safe zone, interest coverage 25%. Plus we have future revenue growth rate by analysts over 17%, and it is definitely amazing. Smooth grow in revenue, but this quite high debt don't really looks good. I think they just acquire someone. That is why they have this huge jump in debt. United States and Canada, 36% it is an oil business, and another part 63% environmental cleaning. I checked the presentation, and I really don't want to do it in the video because it is absolutely super boring and slow company. I don't think that it is interesting, and if you would like to invest in it, you can, or you have to do it yourself, and never listen some YouTubers or financial YouTubers. The second one, it is Clean Harbors, and I really like it too, but I rebuilt HCCI model, and with 20% growth rate, it is like plus 30% in 1 year and plus 60% in 2 years. Definitely with all of these Fed moves, maybe it is a good idea to buy it somewhere here and sell it somewhere here, and just sit on a cash. I researched a little bit hard the competitor. It is Clean Harbors. Here you can see that for the second quarter of 2023, Clean Harbors expect adjusted EBITDA to decrease 7 to 9% from the prior year. And for the full year 2023, the range is based on anticipated GAAP and net income in the range of $364 to $400 million. And if we will open CLH again, you can see here that In 2022, net income was 411, and they will decrease in net income in 2023. Definitely, it is not really good. That is why Clean Harbors, I think, pass away from our list, and we have definitely a winner. It is a HCCI. What do you think about Heritage Crystal Clean and about this video? Please write down your thoughts in the comment section below. Don't forget to subscribe and push the like button. And if you want to find more market ideas, check my Telegram channel, Market Ideas.